Good morning, everyone. It is 7 a.m. Chicago time. This is a pre-recorded Trader Bite for this morning, Friday, the 16th of January, 2015. I have to take my son to the doctor early this morning, so I'm not able to be on at 8 a.m. as usual. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A quick rundown of the overnight equity markets open broadly lower, led by Switzerland's SMI, as exporters and banks remain under pressure. The move by the SMB is really a massive one. A one-day revaluation of a currency by up to 40% is a big deal. There are some serious consequences from that, or it's actually foretelling a lot of things. There was a lot of pressure on the Swiss central bank to keep buying foreign assets to hold the euro at 120 as it had promised to do before yesterday. Several FX dealers have liquidity issues now, are in trouble. FXCM and another one in the UK because of it. So there's more trouble here than meets the eye. In addition to that, the SMB would have been under a lot more pressure after the Court of Justice ruling that I talked about earlier this week paved the way for quantitative easing. Quantitative easing would have further depreciated the euro, and what that means is more losses, more pressure on the SMB. The fact that the SMB has released this peg at 120 is, I think, a strong indication that the ECB is likely to make a move on the next meeting or surprise everyone before that. So keep an eye out. Greek banks sharply lower amid reports that Eurobank and Alpha Bank requested emergency liquidity assistance. And then just a short while ago, Eurozone CPI month-on-month came in at negative 0.1 as expected, negative inflation. Also, if you look at treasuries, the treasuries in Europe have slammed through the yields on treasuries in Europe have slammed through the zero line, are in negative territory, meaning that investors are more willing to accept a guaranteed negative return on their money than to keep it invested. In any case, I anticipate, I'm not a long-term trader or analyst or economist, but to me, this is all shaping up to give us a period of high volatility and potentially a market correction. Again, I don't have a bias. I'm just a day trader. Turkish President Erdogan says he does not understand why the Turkish central bank is holding steady with other central banks cutting interest rates. It needs to reconsider its actions. So here you have a battle of a currency battle that's going on, and Turkey is becoming affected by this. Again, further indication of what I was just talking about. Looking ahead today, at 7:30, in about 27 minutes, we have U.S. December CPI. The expectation is negative 0.4% month-on-month. Year-on-year, we have 0.7%, much lower than the 2% mandate, and 1.3% prior. Ex-food and energy, we're looking for 0.1%, 0.1% prior, in line year-on-year. And then looking at after that, we've got at 8:15 Central, we have industrial production and cap utilization expecting negative 0.1% and 79.9%. The key number for today is at 9 o'clock Central, 30 minutes after the cash open. The January prelim University of Michigan confidence expected at 94.1 estimated. We have 93.6 prior. At 12:10, we have Fed's Bullard delivering a presentation on the U.S. economy and monetary policy. We expect to hear comments on that. And then at 3 p.m. Central, 4 Eastern, we're looking for total net tick flows. There's no estimate. I want to remind you again that Martin Luther King Day is Monday. It's a bank holiday. The pits will be closed and Globex is open for half a day. Of course, this does not affect Europe or anyone else. It's a U.S. holiday, so Expect a sluggish day on Monday. If you're a stage 5 client, be aware that we'll be staffing phones on a skeleton crew, so be sure to have your account number and your emergency numbers available if you plan to trade on Monday. Let's look at the technical picture. I'm going to cut right to the chase here. One quick thing I want to look at. Yesterday, I was anticipating, I was on daytradingradio.com, and during the interview, I had indicated that I expected 1980 to be tested yesterday. It took a while, it took all afternoon. The market started moving towards it at the pit close, and it hit it almost immediately after the Globex session reopened. Looking ahead, though, and pulling back all the way to the beginning of October, these are weekly profiles. A lot of these have played out really nicely. You can see here the profile getting hit by a couple ticks on the test of the week ending the 9th, the week of the 5th. We have a lower low. We've got one time framing down on our weekly. So the intermediate term trend is firmly down now, with it breaking lower than that 86.50 and 84 quarter. Now the over underline is the CLV or MCLVN at 53 and a quarter. This is my over underline. Losing this brings us all the way down to 1902 as a high probability next, 1902.50, and then we start to tackle prices that are even lower than that. That's the long-term weekly view. That's not today or tomorrow or Tuesday, but 52 quarter becomes the next battle zone for the markets going forward. So wanted to show you that. On the bigger picture, oops, okay. Composites. The market put in a higher low yesterday on the day session. The lower low, as I said, overnight. I'm still looking at a continuation pattern here, expecting a continuation pattern to take out this 84 quarter on the day session. We're opening below. So this morning, with it opening below, you can see here on the overnight, there's the quick drop on the reopen down to 78 and a quarter, small bounce to the mid, 72 and a quarter, small bounce to VWAP, 70 and a quarter, and then it's been stabilizing. The profile is very very balanced, and the volume so far is not very high, but this shows that the overnight inventory is short. The expectation here is that on the open we'd have responsive buying back towards 92.50 and a battle there. 92.50, if 92.50 is not achieved, the expectation is we start to roll down into the levels that are below us at 73 and a quarter CLVN, and then the gap at 66 and all the way down to 55.50, and then we'll have that 52 quarter area below us. If this does turn around, then I'm looking at 2,000 and then the levels above. I don't expect it to come out of yesterday's high today, not into a 3-day weekend. As always, remember, it's Friday. It's not great to get into the weekend with a hole in your pocket, so be conservative today. I expect the action to die out fairly early, so pick your spots and good luck. I'll catch you on Tuesday. Take care.